Hello, everybody. Bengala Tunji here. Today we shall be looking at internal analysis. Internal analysis. Having gone through competitive forces, we've examined life cycle model. We had examined life cycle costing and its benefits, the BCG matrix. We had looked at the categorization of products in the market. We had examined SWOT analysis. So today we are moving on, and if you are the first timer on this platform, please go and check up competitive forces video so that you can be on the same page with us. So today we shall examine strategic capability, what it means, and how can we have strategic capability, build it up. Then we will look at who is a customer and how can we meet our customers' needs. Then the groupings of customer or types of customer, the 3 types of customer will be examined. Then we'll move on to the 4 P's of marketing mix. The 4 P's of marketing mix. Then we'll establish critical success factors, how it can enhance organization's performance, and critical success factors relationship with key performance indicators will be examined. Then competitors benchmarking will also be examined today. Then we'll wrap things up with value chain. Then we'll move to competitive advantage in our next video. Actually, internal analysis is preparing us for competitive advantage. So if you are just joining us or you've been on this platform but yet to subscribe, please go and subscribe to the channel GJAMESASSOCIATES. We are value to your lives, we are value to your businesses. Please click the notification button, engage us, comment whether what we are doing is good or bad and how we can do it better. When you click subscription button, you are helping others and pushing forward the message so that others can benefit. Also, you are encouraging us to do more, and you also will be notified when you click the notification button and subscription button and like, so that when we release new video, you will be able to see it. So we will move on to our studies today now, right away. Strategic capability. Strategic capability. So when we are talking about strategic capability, what are we really talking about? Please note, at the center or at the heart of strategic capability is resourcefulness. No organization can build strategic capability without being resourceful. Maximization of our resources is critical to achieve strategic capability and competitive advantage. So our core competence must be looked into critically and examine how we can make ourselves strong internally. So for us to achieve strategic capability, organizations must look within. What do we have in our arsenal to mesmerize our industry and have a dominance and dominate the market? Let me quickly show us this diagram. Can we see this? So this diagram is depicting strategic capability. You see at the apex is strategic capability, but the base of strategic capability, please, is resources. What do we have in our arsenal? What do we have at hand. What do we have which our competitor does not have? We must be able to pinpoint them and build core competence on them. So we see at the base is resources. Then maximum utilization of them will give us core competencies. Then we will move on to establish a system around our core competencies, which we call entities delivery mechanism. So we build a system around our core competencies to ensure that we deliver maximum and meet the need of our customer. And when we do this, we will say we are having competitive advantage over the competitors. And when we've gone through these processes, we achieve strategic capability. Okay, so the meaning of strategic capability, we can describe it as the use of core competencies to create competitive advantage. You see, to create competitive advantage. So without looking inward for our resources, we will not be able to achieve competitive advantage. Without maximizing our resources, we will not be able to achieve competitive advantage, and we will not be able to build strategic capability. Performing better and prosper in the industry we are in. So strategic capability reflects the ability of an entity or an organization to use and exploit the resources available to it, and also sustaining the resources and the ability to use the resources, because we must be able to access the resources and we must be able to continue to have the resources. If not, like human resources could be hijacked or poached rather. So we must have it and we must retain it for us to achieve strategic capability. Resources must be accessed, must be retained. Achieving strategic capability. Like I said, strategic capability is built and focused on resources. So it is resource-based. A firm is based on the view that strategic capability comes from competitive advantage, which comes in turn from the resources of the firm and the use of those resources. Like I've illustrated, let us move forward from here now. So the base of capability, strategic capability, is resourcefulness. So an organization could have some of these resources. Human resources, which is critical to earning the most critical capital an organization could have. So we could have human resources, we could have physical resources in form of raw materials and the like. Maybe where we are geographically located, we have the resources or the inputs in abundance than other competitors around us. So we can use that as an advantage. Another resources that an organization could have is financial resources or financial muscle. Of course, human resources will come with intellectual capital too. So if we have intellectual capital, patent rights and the like, these are very solid resources that organization could have. Then we use it maximally rather, so that we can outperform our competitors. So when we are talking about resources, basically we will look at two types or natures of resources. It could be threshold resources, and we could have a unique resources. We have threshold resources and unique resources. So we now ask ourselves, what is threshold resources? What is unique resources? Every industry, every market has threshold resources. So threshold resources simply means to what extent, minimally, must any operator within this industry have resources to start with. Resources to start with. The minimum requirement. That is threshold. Like if somebody wants to go into a higher institution, there's a threshold in the passage of the examination. Like when somebody wants to enroll for professional examination, like this one, Ican, that we are studying, there is a threshold, minimum whole level requirement, BSc, HND, and the like. Those are threshold resources. So threshold resources simply means the minima that organization must meet to be in that business. They are the resources that an entity needs in order to participate in the industry and compete in the market. Without threshold resources, an entity cannot survive in its industry and market. Just like nobody will even become a professional student in the first place if he or she does not have basis, maybe the whole level or whatsoever individual to enter. So that is the threshold. So every organization must meet the threshold resources. 2, we have unique resources. And please note, when we are talking about strategic capability, we are actually talking about unique resources. Because unique resources are the one that will set us apart in that industry and that will give us advantages over competitors. They are resources controlled by the entity that competitors do not have and will have difficulty in acquiring. So if at all they want to have it, it will be very difficult to replicate the resources we've gotten. So that it is unique to us. Unique resources can be a source of competitive advantage. Is key when we are talking about strategic capability, is built on our unique resources. Because if we do not have unique resources, we will just be like every other player in the industry, having threshold resources. A unique resources is a resource that competitor would have difficulty in acquiring. For example, ownership of scarce raw material. That's an example, which, because it's scarce, not everybody can easily get it. Like exploration rights, mining rights. Maybe we are located in a place that is unique and maybe is the only location on earth in which the resources for our industry can be found. And we are just located in that place. That is a unique resources. Or those are unique resources rather. Then we can have like special privileges, like patent right, franchises, and the like. That's another unique resource. We could be in a company that operates in an industry that must have license, and to get that license is so tough. That is a unique resource. for the organization that has it. Competence now. Let's move on to competence. They are activities or processes in which an entity uses its resources. Like I said when we are introducing, we build our competencies on what we have, which is our resources. So competencies can only be built on what we have. Utilization, effective utilization of what we have. They are created by bringing resources together and using them effectively. It's when we use our resources effectively that we say we have competence or core competence. A competence can be defined as an ability to do something well. We are known for that thing, that when it comes to this organization, as regards these aspects, they are the best. So that has turned to core competence. Threshold competence and core competence. Threshold competence. So when we are talking about threshold competence now, we are talking about something like threshold resources, in which it is expected of every player in that industry to have it. So that is threshold competence. But when we are talking about core competence or core competencies, they are activities, processes, and abilities that give the entity a capability of meeting the critical success factors for products and services and achieving competitive advantage. Is unique to that particular organization. They can do better in that regards. That is core competence. But everybody else must have threshold competencies. Threshold capability is the minimum that an organization can have to operate within an industry. The concept of core competence was actually developed or suggested by two people, Hamel and Prahalad, around 1990s. And they define core competence as this: activities and processes through which resources are deployed in such a way as to achieve competitive advantage in ways that others cannot imitate or obtain. Activities and processes through which resources are deployed in such a way as to achieve competitive advantage in a way or in ways that others cannot imitate or obtain. That is core competence. So to continue to be a market leader or industry leader, it's not good enough that an organization will have core competence. They must be able to sustain it. That is, not only should we be able to access that unique resources, we must be able to continue in accessing it. We must have it. We must be able to retain it. Sustenance of core competence is key for a strategic capability. If not, it's more or less like back to square one, and other competitors can easily overtake us. So sustenance of core competence is key to strategic capability. So in summary, core competence and strategic capability, they go hand in hand. And for us to have sustainable capability, we must have a durable core competence. That is, be able to retain it for longer period. And also, our core competence, we must ensure that it is not easy to imitate by our competitor. So looking at this diagram, we can summarize everything we've been saying in another version. So resources, we can have unique resources and we can have threshold resources. Then when we have our threshold resources, we have something like threshold competence. But when we build on our unique resources, we will eventually have core competence. So having established what core competencies are, what strategic capability is, we want to look in more details about capability. So capability is built on resourcefulness as its base, and effective utilization gives us core competence. So when we are able to do something better than our competitors, we will say we have core competence and capability. But even with that, it's still not good enough. Organizations must develop themselves to have dynamic capabilities. We now ask ourselves, what is dynamic capabilities? Simply put, to have dynamic capability, we are talking about organization having ability to respond to occurrences within the industry and proactively lead through innovation. So it's not that we are good or very good in our industry at achieving one thing or the other, producing or rendering a particular service. Even when challenges come in that industry, we can easily innovate. In fact, we can easily disrupt the whole industry. That is dynamic capability. So our capability must not be static in nature. It must be dynamic. It must be responsive. It must be proactive. And that is dynamic capability. It's a term used to describe the ability of an entity to create new capabilities by adapting to its changing business environment. Just as we know, the business environment continues to change and is changing so rapidly these days. So it takes an organization with dynamic capability to be able to have hedge or continue to retain their dominance in the industry they operate. Renewing its resources base, also developing new and improved core competencies. As they progress, they are continuing to be dynamic, to be better, to be innovative. Dynamic capabilities are abilities to create, extend, and modify ways in which an entity operates and uses its resources. Dynamic capability. Dynamic capability are the ability of entity to adapt and innovate continually in the face of business and environmental changes. Dynamic capabilities refers to the ability of an entity to respond to environmental change successfully, no issues, and recognize the need for change and opportunities for innovation through new products, processes, services. So an organization that will have dynamic capability must have foresight, must have insight, must have hindsight. So all these three are necessary for us to build dynamic capability as an organization. So one of the ways to have strategic capability is to be cost efficient. So we shall be looking at cost efficiency and how it affects our capability as organization. Cost efficiency. When an organization builds capacity to ensure that they are able to produce at the least price without compromising on quality, that is what we are talking about. So they have cost leadership and cost capability. They are so efficient. In strategic management, cost efficiency refers to the ability not only to minimize costs in current condition, but to continually reduce costs over time. So they continue to get better and better, even at price leadership or at cost leadership and quality leadership. So they are able to produce affordably, and they have the best quality of product in the market. So how can organization achieve strategic capability using cost efficiency approach? Two ways: by economic of scale or economies of scope. They can have economies of scale and they scale up, buying in large quantities that other competitors will not be able to afford, which goes into their product development, and they are able to produce best quality at the least price within the industry. Or they expand their scope and even their input becomes an output to them, and by so doing their scope has been enlarged and reduced, have the reduction effects in their output pricing. Economies of scale. Reduction in cost can be achieved through economies of scale. It refers to ways in which the average cost of production can be reduced by producing or operating at a higher volume of output. So we buy in volume, we produce in volume, and it gives us leverage over others by beating the cost of production downward. Economies of scope. In some countries, reduction in costs might be achieved by producing 2 or more products. Like in Nigeria, an organization can produce 2 or more products, and the input in one becomes an output in another. So instead of them buying from outsider, is produced within, and they achieve economies of scope, so that the entity that makes all the products achieve lower cost per unit than competitor that produce only one of the products. So cost efficiency and capability can be enhanced and achieved through economies of scale and economies of scope. So let's move on to corporate knowledge. Do we know ourselves as organization? Do we know enough about ourselves, about the organization, about our resources, and the like? So corporate knowledge is another way of having strategic capability in which organizations expand their territory knowing better, collaborating with other stronger people with core competencies or organizations with core competencies, leveraging on technology, knowing about information system and how it affects and how they can leverage on it, continual analysis of their operations, trying to know themselves better and how they can achieve. So leveraging on knowledge is a big deal nowadays for an organization and for industry and players within the industry. And when an organization has built capability about or around knowledge is a great core competence that they are having, and they will be able to use it to the advantage in the industry. A capability in knowledge management comes from combination of unique resources and core competence, and experience in industry or market, which we know this our industry, we be in this industry, and we know enough to know that we need to change. So that is corporate knowledge. The knowledge that employees have within our organization, that is part of the volume of our knowledge as an organization. The management of people, success in encouraging creativity and in new ideas, like Apple. Their slogan is think differently. So that is their corporate knowledge. They are addressing, that slogan is addressing their corporate knowledge, and at the end of the day is building up their corporate capability, because everybody begins to think differently. So leveraging on information system, information technology, and the like, these are part of corporate knowledge. Leveraging on information, leveraging on know-how or competencies of employees, leveraging on people management, and everything that surrounds information and knowledge is a capability that organization could have and leverage upon. As we are wrapping things up on corporate knowledge, it's important that we know that before we can have corporate knowledge, we must have examined ourselves, asked ourselves some series of questions as organizations. Like I want to believe it was Aristotle that said it, that a life that is not evaluated does not worth living. So life must be evaluated, just like organization too must ask themselves some series of questions to know themselves better. So in doing this, we must profile ourselves or audit ourselves to know better about our organization, our resources, our capabilities. We must ask ourselves some series of questions which we call corporate profiling or resources audit. So we must ask ourselves some fundamental questions like, what are the resources that we need as an organization? Or what are the sources of our resources to be assessed? What are the cash flows of the entity? Which product is bringing in, which one is not bringing in? What are the sources of liquidity, that is available cash or borrowing? How well does it control trade receivable, that is our debtors or indebtedness to us? How have we been managing it? How can we do it better? It's part of series of questions and audits that we must ask ourselves to know ourselves better as a corporate organization. Ask ourselves some series of internal control questions as an organization. We must evaluate our resources also, asking some series of questions. How well are we control our resources? We must be able to answer it in order to know ourselves better corporately. How effective have we used our assets? How effective have we used our assets? How effective is our financial reporting and accounting system? We must ask ourselves all these and many more series of questions for corporate knowledge. How effective are risk management? How effective are we managing our risk? Do we have risk management systems in place? Is the entity organized in an efficient way? Do we organize ourselves internally? Do we have internal coordination and congress? And another framework that we can use for corporate knowledge to know ourselves better is what we call VRIO, VRIO framework. VRIO framework can help us too. And it's a simple tool too, just like SWOT analysis. But we are not dealing with SWOT analysis here because we've dealt a lot with SWOT analysis under competitive forces. So the VRIO framework looks at 4 fundamental things around our strategic capability. One is value, representing that V, and R is representing real or reality. I is representing imitability from the word imitate. The last but not the least, O is representing organization. So we can use VRIO framework for corporate knowledge, that is to gather information about ourselves. We will be asking ourselves a value question. Does the resources provide competitive advantage? That is, are we giving value through the resources that we are harnessing as an organization? So we need to do our value chain analysis and audit too with this to know better about our value delivery. And we'll soon get to value chain too in the course of this video. Then reality is talking about the resources we have. Does competitor has it too? So if we have a unique resources rather that our competitors do not have, so it means it's rare. But if what we have is at the threshold in which everybody should have, then our capability may not be strong enough using VRIO. So the reality is about competitor being able to have what we have. High is talking about imitability. Can our competitor imitate us easily? How easy can our competitor produce the quality that we are producing or achieve our cost leadership? And last but not the least, organization. Organization is the entity organized to exploit its resources for best advantage. So how organized are we? How coordinated are we internally? So these are questions that we must ask ourselves in order for us to know our organization better and have a corporate knowledge. So now we had concluded about the strategic capability using core competence to achieve strategic advantage and the like. We want to move on now to knowing our customer. Who is our customer?